Good morning, everyone, and thank you for joining us in such a special event. Today, we will be talking about the role of banks and financial institutions in scaling up sustainable economy. This event is jointly organized by the United Nations Environmental Program Finance Initiative, UNEP-FI, and the Caribbean Banking Association, who became a support institution of UNEP-FI last year. Today, we have a very impressive panel that will be sharing their views and lessons learned in this journey. Please remember that you can send your questions to the Q&A section, and this recording will be available. Without further ado, I'll give the word to Mr. Dalton Lee, chairperson of the Caribbean Association Bank, who will be giving his opening remarks. Mr. Dalton, you're on.
Thank you very much, Joanne. Mr. Eric Usher, head of the United Nations Environmental Program Finance Initiative, Mr. Selwyn Hart, special advisor to the Secretary General on Climate Action and Assistant Secretary General for the Climate Action Team at the United Nations, esteemed panelists, session moderator, other special invited guests and attendees, I bid you all a good morning. It is my distinct pleasure to provide some brief welcome remarks on behalf of the Caribbean Association of Banks at today's high-level dialogue on the principles for responsible banking. Given the disproportionate adverse impact and effects on climate change on the Caribbean region, this session is not only highly relevant, but also demonstrate the tangible steps being undertaken by members of the region's banking and financial services industry to play our part in the achievement of the Sustainable Development Goals. Recognizing that support from executives and senior management team of any institution is paramount to the success of new ventures, we thought it would be opportune to convene a high-level event related to this framework, given its novelty within the Caribbean. That said, we hope that by the end of this morning's session, everyone in attendance will leave with a full appreciation of the principles and be motivated to take the necessary steps to ensure that every financial institution and organization represented here today becomes a signatory to the principles or a supporting institution of the UNEP-FI. I am particularly pleased to note that the CAB has led by example in this regard, having become a supporting institution of the UNEP-FI last year. Once again, on behalf of the board and the Secretariat of the Caribbean Association of Banks, thank you for your attendance and do enjoy this morning's proceedings.
Thank you, Mr. Dalton. Very good, well received. And now I give the word to Mr. Eric Kushner, head of UNEP-FI. Eric, you're on.
Thanks very much, Johan. And first, a big thank you to Dalton Lee and all the colleagues from the Caribbean Association of Banks who have helped plan this important dialogue as they become the UNEP-FI supporting institution last year, as Mr. Lee has mentioned. I also want to thank UN Assistant Secretary General Selwyn Hart for his presence today, and I'm pretty sure that as a Barbadian, Selwyn understands the importance of deploying effective and immediate actions to stay below 1.5 degrees and to protect our planet's future generations. According to the Association of Caribbean States, between 1990 and 2008, the Caribbean experienced 165 natural disasters. The total impact, including damage and losses for this period, was estimated to be $136 billion US, with the economic impact being the highest at about 63 billion. That's about 46%. And as Prime Minister Mia Mottley of Barbados told us at COP26 last year, a 2 degrees Celsius rise in climate temperature would be a death sentence for the island and coastal communities. We understand that the Caribbean countries are particularly vulnerable to climate change impacts due to their size, location, and exposure to natural hazards. In recent years, players across the financial sector have started taking actions to integrate climate change and broader sustainability considerations into their investment and wider financial decisions and portfolio allocations. However, there's still a lack of clarity about what constitutes an environmentally sustainable investment or economic activity. So there's a lot of work to be done. There is a growing demand for decision-useful climate-related financial information by investors, and there are many factors, I think, behind driving this investor demand, ranging from in Europe, European regulations are requiring investors to disclose climate-related information to weather-driven. And on the other end, we're also seeing obviously the weather-driven events resulting in significant financial losses. So all of these movements and changes are driving a pressure on generating the type of information that investors and other financial actors can use to better prepare their portfolios or weather the increasingly unstable climate that is to come. So in a range of ways, we're seeing investors seeking to better information. For example, Climate Action 100 is a group of 340 investors who manage nearly 34 trillion in assets. And they've committed to essentially engaging with the world's largest corporate greenhouse gas emitters to strengthen their climate-related disclosures. So the pressure certainly is mounting. Now, at UNIP-FI, we work to inspire, inform, and enable financial institutions to improve people's quality of life by leveraging their role in accelerating sustainable finance. We work with today more than 450 of the banks, insurance companies, and increasing, and as well with the investment community. We bring together technical experts and other key stakeholders to convene ambitious collective action. Now, this partnership between the UNIP Finance Initiative and the Caribbean Association of Banks, we hope will help banks and other financial actors to navigate this path in the region. We offer a wide range of series of tools and frameworks, especially tailored for the banking system to assess its impact and to set targets aligned with countries' sustainable development priorities. Through our work, we're aiming to align UN frameworks with the bank's core business, creating new business opportunities while decarbonizing bank portfolios and providing a positive impact to communities and the planet. So please consider this as an open invitation to work with us. The only way to tackle climate change and other sustainability threats is by solidifying collaborations that bring long-lasting solutions. Thank you. Back to you, Johan.
Thank you, Eric, very much. And yes, this is an open invitation to everyone who wants to join us and work with us. Now, I will give the word to Mr. Selwyn Hart, and special warm welcome, and thank you for joining us in this event. Mr. Selwyn, you're on.
Thank you so much, and good morning to you, and good morning to Dalton and to Eric and all of the other colleagues and friends. And I am delighted to join you this morning. I would have preferred if we were all in the Caribbean seeing each other face to face, but I hope that day will come pretty soon. The challenges of the Caribbean to the climate crisis have been well documented. And the reality is that all of you are operating in what is a known global hotspot for the climate crisis. In the most recent, one of the most recent reports of the Intergovernmental Panel on Climate Change, which is the #1 scientific body, thousands of scientists, in their most recent report on vulnerability and impacts, it made clear that if you are in Central or South America, Central, East or West Africa, South Asia, or in a small island developing state, including the Caribbean, of course, you are in one of the global hotspots. And if you are in one of these global hotspots, persons in these global hotspots are 15 times more likely to die from climate impact, 15 times more likely to die from a storm, a drought or a flood than persons living in another part of the world. We're at 1.1 or 1.2 degrees of warming above pre-industrial levels. And within the Caribbean, you're already seeing impacts on an unprecedented scale. I visited the Bahamas in 2019, a few weeks after Hurricane Dorian, and the impact there was it was unbelievable. And this was a few weeks after Hurricane Dorian, where the entire island was destroyed. And I remember only seeing on that entire island of Abaco, only seeing 2 buildings remaining, fully intact. The reality is that we will be living in an increasingly climate stressful environment in the Caribbean, and your business models will need to adapt to this current and future reality. So briefly, where is the world in, where are we in, or where is the world in its response to the climate crisis? And as I said earlier, we're at 1.1 to 1.2 degrees Celsius above pre-industrial levels. And every fraction, the reality, and the scientists tell us this, every fraction of a degree of warming matters. In 2015 in Paris, countries agreed to spare no effort to try to hold the increase in global average temperature to 1.5 degrees. As I said, we're at 1.1, 1.2, but they agreed that 1.5 degrees Celsius of warming should be the upper limit of warming. Now, that implies rapid decarbonization of the global economy. Our use of fossil fuels, coal, gas, oil, it's the main driver of greenhouse gas emissions, the main driver of carbon pollution. Now, as part of this global regime under the Paris Agreement, countries agreed to submit national climate targets. They're called nationally determined contributions periodically as their national contribution to reducing dangerous greenhouse gas emissions. Now, the scientists tell us that if we are to be on a pathway to keeping this 1.5 degree goal alive, it requires us to halve global emissions, reduce current global emissions by half by 2030, less than the next decade, to be on a pathway to achieve net zero emissions by 2050. All right, so that's what the scientists, the most authoritative group of scientists have told us. We must significantly reduce emissions over the course of this decade. And this was the primary focus of the discussions that took place in Glasgow last year under the UK COP president. It's called COP26, Conference of the Parties, COP26. So very strong focus on what countries need to do over the course of the next few years to ensure that global emissions are halved. And we saw a number of commitments, not only coming from governments, but also from the private sector, from financial institutions, commercial banks, institutional investors, asset owners and managers, insurance companies. Eric and his team worked really hard on assembling these various alliances, committing to net zero by 2050, which is fine. And some of them have taken the additional step of also laying out very clearly how they intend to cut emissions over the course of the next decade. So this is the biggest challenge, I believe, facing the international community at the moment. And we have a variety of crises, from the war in Ukraine to COVID and its recovery, global instability, social and political unrest taking place in various hotspots around the world. But if the world fails in its efforts to limit warming by 1.5, the consequences will be catastrophic in every part of the world, in every region, on every continent. And and I'm not just trying to frighten people, but we're already seeing what is happening at just 1.1 to 1.2 degrees. So the actions that are taken this decade, and I really want to emphasize is that are being taken now, that countries, companies, financial institutions, and ordinary people need to take this decade, will be absolutely critical in terms of shaping our future. So, as I said, scientists have told us that we need to have emissions by half over the course of this decade. But when we add up the commitments that countries have put on the table, that countries put on the table in the lead up to Glasgow, they show a 14% increase in emissions over the course of this decade. By 2030, a 40% increase in emissions, rather than the 45 to 50% decline that the scientists tell us will put us on this 1.5 degree pathway. So the world is way off target. We are in trouble. So one of my central messages to you really is we need you to be given. Your business models are based on you're operating in the Caribbean. Your business models are based on ensuring that you have safe, prosperous, and inclusive societies in the countries and region that you operate. We need you to lead by example, but also be voices in the region and voices globally, really for the most ambitious climate action. We need you to be the strongest advocates possible for strong and ambitious climate action. So, as I said, so the challenges of the Caribbean are well documented. Most of the economic activity in our region is derived from activities in climate vulnerable sectors, be it tourism, agriculture, fisheries, etc. And it is absolutely crucial that we protect Caribbean people's societies and economies. We need to find creative ways of ensuring that these sectors are climate proof as best as we can, be it our ports, airports, massive infrastructure is, we have most of our critical infrastructure in the Caribbean is on the coastline. So sea level rise, increase in frequency in natural disasters and storms, etc., will have a massive impact. There are ways to protect some of this critical infrastructure, and your interventions and your insistence that climate change is taken into account in any infrastructure project in the Caribbean is absolutely critical. We really have some really good scientists in the Caribbean who have been working with these models for various years and can provide your industry and others with the most relevant information. It will also require lots of innovation and creativity in terms of designing new products and instruments, really, that help ordinary citizens as well as the private sector in the Caribbean to mitigate some of the risks associated with increasing climate impacts. But there's also an enormous opportunity for our region, I believe, and that is accelerating the transition from fossil fuel use to renewable energy. In the most recent report of the IPCC, the Intergovernmental Panel on Climate Change that I just mentioned earlier, they pointed out that over the course of the last decade, the cost of wind, solar, and battery storage had declined by about 85% over the course of the last decade, from about 2010 or so. Right? So the cost of renewable energy technologies are taking a massive nosedive. And we're all from the Caribbean, and we know that if there's one thing in abundance in the Caribbean, it's sunshine and wind in many parts of our region as well. So the rapid uptake of these technologies, these clean technologies, must be priority number one for our region. No financial institution, and I know this is a very controversial thing to say, given the booms in the Caribbean, really should be making investments now in fossil fuel infrastructure in our part of the world. in the Caribbean, given the enormous decline in costs of renewable energy technologies. So investments from your entities really should be focused on supporting our region to accelerate this transition away from fossil fuels towards renewable energy. And we know the cost of energy in the Caribbean, 40% of foreign exchange on average in our region is spent on fossil fuels, primarily for electricity generation and for transport. And it is a massive drain on the high energy costs, represents a massive drain, not only on foreign exchange, but also on the competitiveness of our region. The cost of electricity across the Caribbean is 300% more expensive than it is in the United States. So a massive drain on competitiveness. And of course, it's also polluting, despite the fact that we're small emitters. But as I said earlier, every ton of carbon pollution matters. Every degree of warming absolutely matters. So I really encourage you. I'm pleading with you really to support the Caribbean countries. Many of them have put extremely ambitious renewable energy targets on the table. Barbados, for example, Prime Minister Motley in Glasgow indicated that Barbados was seeking to transition to 100% renewables, I believe, by 2030, if I'm not mistaken. And this type of ambition needs to be supported in many ways. You are uniquely placed, you know our region well, you know the Caribbean well, to work with private actors, and you're also uniquely placed to also work with private finance outside of the Caribbean, as well as the international financial institutions, the MDBs, regional development banks like the Caribbean Development Bank, and I saw Lisa Hardin just signing on from the CDB, as well as institutions, other regional institutions like the Inter-American Development Bank Group and IDB Invest in particular. So you are uniquely placed as commercial banks really to act as arbiters and go-betweens between governments, none of whom, are investment grade, and suppliers of capital who, as Eric said earlier, they're looking for destinations that are pursuing a net zero, decarbonized, and climate resilient future. So my central message to you is sign up to the principles, as Eric and Dalton urge both of you. But more than that, it is absolutely essential that your voice, we need your voice at the global level, join the various coalitions that Eric spoke about, and that are pursuing this really inevitable decarbonization of the global economy. It is going to happen. The only challenge is the pace and speed. We want it at the UN to be a lot faster, but we need you to be part of these global coalitions, advocating for the Caribbean, advocating for small countries, and also ensuring that our very unique perspective is brought to bear in terms of decision making and the inevitable rule making that will occur at the international level around climate risk disclosure and disclosure of transition plans and transition risks, etc. And thirdly, really, what you do in our region matters. Your footprint, not only your carbon footprint, but your footprint on the future of the Caribbean is extremely large. As commercial banks, what you say, what you do, what you invest in, the sort of products that you roll out for the private sector and for individuals, that matters, and that will help to define the future of our region. So, you have an enormous role to play one, in supporting the region to address the enormous challenges it faces as a result of the climate crisis, which will only get worse. But equally important, you are uniquely placed really to ensure that the region is able to capitalize on the opportunities from a net zero future, from a decarbonized global economy. I am confident, given the small size of the Caribbean, that the Caribbean can just not be another model of accelerating the decarbonization of its own economies and societies, but it can be the model for how it is done. And as I said, you are uniquely placed to lead this effort in our region. So thank you so much. And I look forward, as I said at the beginning, to seeing all of you in person at some time, but more importantly, for us to continue working together to advance this important global agenda, which has significant implications for the current reality and also the future of the Caribbean. Thank you.
Thank you very much for your message, Mr. Hart. Very well received. And I just want to echo these three words in your message: ambition, action, and innovation. I think those are the things that we are driving here. So now moving to the second part of the event, I would like to introduce, this is a very special panel. From Republic Bank, we have Mr. Ray Kling, Head of Investment Banking at Republic Bank. And from Banorte, we have Mr. Jose Luis Munoz, Sustainability Executive Director. This panel will be moderated by Maria Eugenia Sosa, Latin America and the Caribbean Regional Coordinator at UNEP5. Maria Eugenia, the floor is yours.
Thank you, Johan. So good morning to everyone. It's a pleasure being with you. It was very inspiring to listen to Mr. Hart. And I think one of the things that Mr. Hart said is one challenge is how we're going to review the business models to mitigate and adapt when we look climate risks. We need to adapt our economies, and he mentioned some sectors: tourism, fishery, energy, and many others. And definitely there are risks and many opportunities for financial institutions. So in this panel, we want to echo what Mr. Hart said and understand what kind of strategy commercial banks can have when we look this kind of challenge. So thank you so much, Mr. Hart, for your inspiring words. And then I will share my screen. I will share some comments about UNEP5, and then I will open the floor for our speakers. Yes. So very, very briefly, I think just to Eric present UNEP5, but I would like to say again, so at UNEP5, it's a partnership between United Nations and the global finance sector. We work with banks, insurance, investors. So we really want to work together to co-create and to really shift our economy for a greener and an inclusive economy. So we have been working with financial institutions from all over the world. Here you can see most of our members are banks, and we have three main frameworks. The Principles for Responsible Investment, that it was a joint venture with the Global Compact, the Principle for Sustainable Insurance, and recently the Principles for Responsible Banking. So for the Principle of Responsible Banking, we already have more than 240 banks around the world, 40% of the global under management, and in Latin America and Caribbean, we have 70% of the asset managers of the banks here in the region. So I'm very happy today that I'm with Jose Luis and Ryan. Both are members and signatories of the Principle for Responsible Banking. So first of all is an invitation for more and more banks join our initiative. That is a framework in some way to help you to look your strategy, to look your business strategy, understand what are your positive and negative impacts, and then mitigate the risk and leverage the business opportunities with your clients. So I won't read the principles, but just you have an idea. So it is a commitment, and banks should set targets and should show progress in their own portfolio. Mr. Hart and Eric already mentioned, so this is a hotspot for the region. So the climate crisis demands finance sector leadership. So again, this is an invitation, how we're gonna decarbonize our economy. And the public sector finance alone is far insufficient to the task. So this is an invitation for the private banks. Join us in this challenge and work with us to take the opportunities. Some people say that, well, but our banking impact are not so high. Well, your operational impacts definitely is not the most important, but the most important is what you are financing. What are your finance emissions? So here I have one number. Bank finance emissions are on average 700 times greater than the operational emissions. So banks are part of the solution, and they can leverage their client relationships, increase financing of innovation, and reduce the exposure to fossil fuels to reduce their portfolio carbon footprint. On the other hand, adapt real economy business models to really take the opportunities, and again, not only for what is green, but also what are the social needs of the region. So we also have the Net Zero Banking Alliance. So it helps to align the banking sector to address the global climate crisis. So this is part of PRB, and is a gold standard for net zero banking commitment. So in terms of ambition, credibility, accountability, and transparency. And in some way, we know this is very, very challenging, and our role is support financial institutions to align their portfolio to achieve net zero by 2050. And of course, we intend to impact the real economy via finance decisions. So in the end, we work, we are a network. We develop methodologies, we develop researches, and we work very close to our members to get this journey. So this is my initial words to make the context. Let me back here. Wait. And I would like to give the floor for, first I will turn to Jose Luis Munoz. As Johanna already presented, he's from Banorte, Mexico. Banorte helped us to design the principles, so it was not only a UN activity, it was really co-branded. And I really would like to invite that Jose Luis and Ray share with us how financial institutions can integrate sustainability into the business and what's the role of the principles for responsible banking. So Jose Luis, thank you so much again, and over to you.
Thank you very much, and good morning to everyone. It's a pleasure to be here, part of this panel. And well, in general, as you mentioned, at Banorte, we have incorporated the principles of responsible banking, and we're also signatories of the Net Zero Banking Alliance. This has been implemented. We were members of the Net Zero Banking Alliance in 2021. So this is something I would say relatively new that we're incorporating, but it's a clear commitment towards decarbonizing our loan portfolio in 2050. So before I begin, just let me give you a quick introduction of who is Banorte, so that you can have the context of the potential influence that we have for the financial system in Mexico. In general, Banorte is, as of today, the second largest financial institution in Mexico. It is basically the financial system in Mexico is comprised of 7 large retail banks that in altogether we have around 80% of the market share for the banking. And the other 20% is spread around other probably 20 to 25 smaller institutions. So we have a responsibility at Banorte of being the second largest financial group there. And as Maria Eugenia mentioned in her presentation, I mean, the influence that we can have as banks in financing greener, cleaner, and lower emission customers, that makes an impact. But it's definitely not something that we can embark on by ourselves. We definitely need more and more institutions to align to the same principles so that together we can make a greater impact. And not only in the financing, but also influencing the regulators to force all the different banks and institutions to start deploying and disclosing in our regulatory documents how we are growing the greener portfolio to account for emissions on a yearly basis, to clearly state what we're doing to reduce that. Right now, at least in Mexico, this is something I would say voluntary. It is not mandatory yet to disclose this information, but we're gradually lobbying with regulators together with the rest of the banking association in Mexico to make this a mandatory regulation. We're not there yet, but hopefully we will be there soon. Going back internally to Banorte, what we're doing in general, we have a very clear commitment. Our sustainability targets are very well integrated into the overall strategy of the financial group. We have incorporated a sustainability committee that is comprised of the most senior members of the financial group, and the main role of this committee is to oversee the implementation of all the ESG initiatives at the financial group. This committee meets twice a year, and we report progress on different initiatives to that committee. And that committee, through our CFO and COO, provides quarterly updates to the board. So this committee has really high visibility into all the organization. It has a very strong governance, and basically every decision that is made at the committee has enough seniority among the members to make this implementation through the rest of the business areas of the group. As I mentioned before, we are signatories of the Net Zero Banking Alliance. This has created an important shift in the strategy and the way we do business internally at Banorte, because we have to start basically by measuring the potential emissions, not only that Banorte generates in its own operation, but to measure the emissions that we have in our existing loan portfolio. And also, we have a team of people from the sustainability team that have a seat and a voice in the credit risk committees, so that we can evaluate new customers, their potential impact on the environment and climate, etc. And we walk together with those customers to help them mitigate or try to reduce their impact on the environment during the life of the loan, at least while we can control that loan. So that's what we're doing right now, basically working with our existing customers and having an active voice in the new customers that we bring in, so that the credit risk committee has this perspective and is the criteria to evaluate a customer already includes these ESG or sustainability metrics. We have also just issued our first TCFD report on climate impact. This is a brand new milestone for Banorte. We have been measuring not only the impact that we have in our own operations. For example, as you know, we have around 1,100 branches spread out in the country, and many of them are in coastal regions, regions where we have frequent climate catastrophes or disasters. So a first step in this report was to evaluate our vulnerability in terms of our own operation. Where can our operation be threatened by climate risks? And then the second step was to assess initially part of our loan portfolio and to see exactly, for example, in the tourism sector, in agriculture, real estate, where we have more vulnerability in customers. For example, hotels in coastal regions are a very important area, not only for the economy, for the whole economy in Mexico, but also for we have relevant customers in our commercial and corporate portfolio that have to do with hotel developments and resorts. So we also wanted to know where they're located, what is the potential impact for any climate-related risk to their operations, to their ability to continue doing business, and eventually to what would be the risk of non-payment for the bank. So in general, there have been, this is a continued effort. We know that there are many things that we need to do in order to continue growing and to becoming greener in our portfolio, continue with our impact in our local communities with regulators and with our peers to try to influence their decision to join similar initiatives, so that as a whole, as you well mentioned, in the Caribbean, this is also something that has to be done by all the countries and all the different institutions in the area. So the same applies for Mexico and the region. And in a nutshell, that's the way we are organized, but happy to go into any more details.
Thank you so much, Jose Luis. And after Jose Luis and Ray presentation, we're going to open to questions. So you can also send right now your comments by the Q&A, and then we can have some questions in the end. And that's something that you mentioned, Jose Luis. It's about identifying vulnerabilities and what are the financial risks. So this is, I think, one first key step. Before joining UNAPFI, I also worked for a private bank. And I remember when I was dialoguing with my peers on the risk department or credit department. So this was a key question. So it's not only about protecting the environment, it's protecting the business, it's understanding how climate risk affect the credit risk, operational risk. And in the end, we know that climate can have systemic risks. That's for let you know, the Financial Stability Board already have recommendations for disclosure, climate risk, and we already have a network with financial regulators around the world. I think Trinidad Tobago joined this initiative. So we see more and more regulators looking at and trying to understand how climate risk impacts the real economy and, of course, the financial sector system. So I think very key message to everyone that's listening. So thank you so much, Ray, Jose Luis, sorry. So now we'll turn over to Ray. So Ray is also our member in the Principles for Responsible Banking, Net Zero Banking Alliance. It's a great partner in the region. So it's good that you are in the region, in the Caribbean, and we'll be very happy to listen. What are you doing as a Republic Bank? Over to you, Ray.
Hi, Maria, and morning, Jose Luis. Thank you for joining the panel. I think I see some pretty recognizable names on this attendees list. Morning, Vincent. Morning, Naomi. Morning, Gina. Morning, Lisa Harding. As many of you would have remembered, I think last year at the board meeting, I did a pitch alongside Wendy for PRB as we as we like to call it at Republic. So I think, given the opportunity today to come back to you guys and let you know where we are in the process in terms of our own journey. I think, I kind of jumped at it because I think it's a journey that we're hoping to pull some of you along as well. And Special Advisor Selwyn Hart mentioned one key important thing for me that I just want to bring home here. It's our voices, is our representation in the decision making that's happening right now. I could tell you in many of the working groups that are ultimately feeding into some of the policy decisions that may be coming out of Europe or the US. And that's happening in, whether it's the Net Zero Banking Alliance or PRB, we are underrepresented. There are a lot of us right now that, as a cluster of islands, we really don't have, I think, a meaningful seat at the table. So I think, this is an association that could really, to me, kind of bring all of our voices together and make sure that we have representation in our region, because I do see a lot of commercial decisions being made, i.e. which sectors are we going to essentially move away from that would have a direct impact on our region. And if we just become consumers of that, right, we just essentially just kind of wait back for European regulators and our correspondent banking relationships, then push that down on us, then I think we're gonna effectively be doing ourselves a disservice. So this is another call for us to kind of really take a look at this. I think PRB is it's broad enough that it's not just the environment, right? And that's maybe one of the areas that I want to focus on. That it does touch the social aspects, which is very important for our region, right? I mean, I don't need to tell somebody sitting in BVI or in Grenada or Cayman Islands or St. Lucia about the impacts of hurricanes. Every year you guys feel it. There's an anxiety that you start feeling from, I don't know, September all the way through to January, February. So you live it, right? So I think for me, that's a low-hanging fruit. You need to diversify. You need to kind of think about the risk. You need to make sure that your portfolio is guarded against that. That's, to me, that's just me preaching to the choir. But I think there's a tremendous opportunity as the world shifts now to really looking at things through social lens, right? To make sure that our lending is relevant to the markets in which we operate. And what I mean by that is that if we look at our populations and we see high unemployment in our youth, but much of our financial products are geared towards, middle-aged individuals who obviously have a tremendous amount of resources available, then are we as bankers irrelevant, right? Are we setting ourselves up for somebody to come and disrupt our market? That's a question I pose to you guys. So I do think when we think about it from a social lens, we think about women entrepreneurs and the tremendous, to me, the ingenuity that they bring into the market and what they can do. That's an area we need to support. We need to find ways to actually support youth on entrepreneurship. I mean, the traditional way, I grew up in a family that told me I had three options: you either become a doctor, a lawyer, or a banker. I chose being a banker, but obviously I don't think if I were my kids today, if they grew up today, I give them those options, they probably will throw all three of them off the table. But it doesn't mean that their future has to be somewhat less bright if you don't go down that route. So we have to find financial products to actually allow, particular segments of our economy to really flourish. We look at things like tourism. Is our tourism product sustainable enough that it allows just a full integration of our ecosystem? So it's not just, kind of big cruise ships coming, dumping people, and then them leaving before the sun sets and leaving behind essentially nothing for the benefit of the economy. So and that's one of the areas that I think that PRB gives, is it gives a holistic view of your respective countries. What is their national development strategy? and then how we can design financial products to really make sure that we're meeting some of that. We're doing a lot of that in every single island. So it's not just broad brushed approach where we look at the Caribbean and it's like, you know, everybody, because as Caribbean people, we know every island is different. We're not all Jamaicans like people in the US would think, right? We have our individual different nuances. We have our, you know, our history, our character. So it's tying in your national development strategy to ultimately to the banking products that we put out. And we're doing some really innovative things. And, you know, I'll give you a couple examples. In the Cayman Islands, they're pushing, you know, kind of gender products, right? Because they see that there's a very emerging business class here of women entrepreneurs that are looking to do very interesting things. And, you know, they have to stimulate some of the activity that's happening there. So how do we do that? We design products to make sure that that meets the needs of our consumers, but that's actually a national development goal for the Cayman Islands. It's one of the things that the Premier is pushing. So it's making sure that our products tie into the development of the particular countries in which we operate. So that to me ties back into this whole aspect of strategy. And again, I think it's, you know, as indigenous banks in the region, you know, as we think about how do we best serve our region, I do think that it's ultimately seeing how we can customize our loans, our services to make sure that it's serving the needs of the region and not some kind of archaic, outdated mode of banking, which, you know, is, you know, you're just a savings account, checking account, a mortgage, and potentially some operating lines and some business loans. Banking has become much more dynamic, and I think we have to embrace that to make sure that we're developing our region.
Ryan, thank you so much. And I'm very glad that you raised this point about the social issues, because definitely is really important. And we still have around the world, and of course in the Caribbean, millions of people without banking accounts or with not appropriate access to credit. Gender is also an issue because sometimes banks also have women in their base, but when they look the volume of loan, they are lower, much lower than men. You mentioned the indigenous people, there are other vulnerable groups. So really happy that you raised this point, because of course, this is part of what means responsible banking, is to really understand what are the needs of the clients and of the society, and innovate on how to move forward the business. So thank you so much, Ray. So at this point, I would like to open the floor. You can send your comments and questions by the Q&A. I think that you have an opportunity to talk with Jose Luis and Ryan, super experts on their countries and on sustainable finance. And I will start with one question I received here I will ask for both of you, because I think this is an important question. So we know that's not easy to convince high-level management to integrate social environmental issues in the strategy. So my question is for you, how was your journey? How was the interaction with the high-level management to propose this kind of commitment? What was the main arguments? So why your institutions embark on that? And in some way, if this reflected on your bank strategy. So maybe you can help our audience to understand what are the main arguments they should have when talking with the high-level executives in their own organization, board of directors, and executive committee. So maybe I start with you, Jose Luis.
Yes, happy to give you that. And I agree with you. It's not. It has not been an easy job. It's something that I believe we as human beings tend to operate in the same way that we have been operating in the past, that it has proven to be successful, etc. And when you try to change the direction of a big ship, it takes a big effort to make the first moves, and then gradually it changes direction. What we did is we definitely needed to start discussing this, the relevance of becoming more socially responsible and changing and adapting to this new reality from the board. It was something that our chairman has been convinced that this is something that we need to do. We have been doing different things to create more sensitivity for about these topics at the board level. Last year we conducted a self-assessment for all of our board members to have a better understanding of what was or what is in each of the board members' mind. What does sustainability mean? And we to do that self-assessment because we could not assume that because they are board members they have a very clear reality of all the different issues that we face as a financial institution and the impact that we may have. So that was a first basis. With the results of that self-assessment, we also started with a training for ESG matters, so that we can have, let's say, a level playing field for all the board members, so that they can understand exactly the main principles that we are aligned for, the main commitments that we have made, and what are the different steps that we as a financial group will follow in the next years, and how they align with the strategy of the financial group. Once we did that, then there was a very clear mandate from the board to the rest of the managing, let's say to the main direct reports of the general management. So that helped a lot to ease some of the initial frictions that could be caused by, I mean, for example, if when we started at the beginning with the sustainability team being part of the credit risk committee, there was some reluctance into, let's say, not engaging with some customers because of their higher impact in the environment. Most of them, I mean, in Mexico, for example, we have a large exposure. Well, I wouldn't say large exposure, but since we are an oil generating country, it is very difficult not to engage in the financial sector with oil-related suppliers or producers. So making aware that any additional exposure to oil would be detrimental to energy and I mean to the overall commitments that we had signed. It was a message that had to come from the board to the rest of the organization, so that let's say the discussions would not be centered between the sustainability team and the risk team, but if we had a clear mandate from our most senior panel, then the mandate would ease some of those things and encourage alignment. What we have been doing is we're not yet in a position to completely eliminate our exposure and our dealings with oil-related industries, but we have set internal limits that we will not go above a certain exposure to these targets, and then gradually from now until 2050 try to reduce and mitigate that exposure, and then try to compensate it with other initiatives that we are launching as a group. And for example, last year, a few weeks ago actually, we launched a green car loan, green auto loan, that has preferential conditions for people that want to buy a hybrid or a fully electric vehicle. For example, that's something that we're starting to issue. We also have another pipeline of products that will be released to encourage women in SMEs that they have a particular business or a particular business need. So different products that will enable those that sector of the population and encourage them to continue growing. So in general, I mean, for example, we're also launching some real estate loans with also preferential conditions for constructors that encompass or that include green building techniques, that use water treatment plants in their buildings, that they use renewable energy, that have green roofs, that use solar energy instead of completely using fossil fuels for the building's operation, etc. So it's something that it is not immediate, but if we gradually have this pipeline of products, and if we have the mandate from the board to align not only the interests of every area, but if we tie that to the compensation of senior management, that's the way we have been evolving. I couldn't say this is a job that has already been completed, but we are in the process of implementing many of those changes.
Thank you so much, Jose Luis, and happy you gave some good examples showing that we have a lot of business opportunities, not only the risks. So thank you. And now over to you, Ray, if you can share with us your experience at Republic Bank to convince everyone that to move in this direction.
Yeah, well, I think maybe my case may be a little bit unique in the sense that there was not a lot of convincing. I don't think that was, I think there was more of a consensus. We had clustered around the need to do something, to take a bold, actionable step. So when we looked at PRB, we wanted to do it. And I think once we figured out that that it was an iterative process, right? I think one of the things that, maybe for the CAB membership, you have to appreciate is you don't want to get involved in this analysis paralysis, kind of process where you're thinking about all the things that you have to do, when in actuality, you should make a decision, take a bold step, and then kind of move along. That's generally how I think we've been able to really kind of not only sign on to the principles, but make sure that that it's something that we can espouse, because nowhere along the way have we seen any kind of very hard coded deadlines that really puts our team under pressure. In fact, I think it's much more of a collaborative, much more flexible agenda where you really kind of set your own pace. And I think what many of you will realize is that you're probably a little further along in the process than you would actually give yourselves credit for. And then more importantly, there's a lot of work that was done before you. So there's a lot of work that you could rely on to really help you quickly get up to speed. But I mean, just in summary, our process is not going to be, everyone else's process. I think it's, every bank has its own set of nuances that they have to kind of fight through. Mine was particularly, I think, favorable in the sense that I had the full support of the CEO of the bank, the president of the bank, Nigel Baptiste, who it was, kind of one of his brainchilds. So I think once you get that, then, it's like the Red Sea, everything just opens up for you, because you just keep name dropping his name, and then people just kind of move. But with the same token, I think there have been hurdles that we had to overcome, because, you do have limited resources in the organization. So it's only so much time in the day that you could dedicate towards essentially doing some of this, but also potentially, doing some of the other business items as well. And I think that's where maybe you will start to see some of the challenges may pop up. And that's why I would guide you guys to the secretariat. So you would have, I think, not only would UNEP FI team, but also with CAB and potentially with some of the other peer banks, you'd have to me, a library of information that would allow you to really quickly get up the curve, much quicker than we did. So I think the whole process is intended to make the next person that comes lives much easier, because you have kind of a roadmap for it.
Thank you, Ray. And as you mentioned, I think UNEP-FI and CAB are part of this process. So count on us in your journey. I think that's important to say. And we've received a question here from Mr. Jerry Blenheim. And he's mentioning that in 2009, it was done an environmental risk and sustainable finance study with the government of Barbados, the Ministry of Environment. And look, I wasn't at UNEP-FI at this moment, but was also UNEP-FI was part of the survey. And the result was that 60% of the banking community indicated they were likely to pursue asset management growth strategy, which were recognized of likely environmental and social risks impacts. And 40% were not fully pursued of having this in their strategy. So his question is, can anyone speak to where the banking sector is or trending to at this stage? So maybe I can also share a little bit of our experience in the region. And I also like to hear from you, Ray, what you understand are, where is the banking sector, and maybe what are the barriers and how to overcome this. So for our perspective, we have been working in the region, in Suriname, Barbados, St. Vincent, Grenadina, and Grenada. I'm very happy to see some of our partners here today. We are also partnering with IDB and CDB. So soon we're gonna have a series of trainings about social environmental risk management, climate risk, opportunities, and that's it. And part of this project was to make a diagnostic. So unfortunately, I think that we still have a gap. We still have, and it's not only looking the banking sector, but I think there is many challenges when we look regulation, the ecosystem. So there is a lot of room to improve these strategies for the financial sector, but also in a broader perspective. And yeah, so this is some very general comments of our experience. And maybe Ray, you can also share your opinion. Where is the banking sector are trending to at this stage?
Yeah, I mean, I don't think I was around in the Caribbean. I was in the US, on the tail end of a financial meltdown. But I note the question. I think I can't speak for the entire banking sector, but I could tell you as the largest financial group in the Caribbean, I could tell you what our strategy has been, and maybe that will be indicative of where maybe some of the leaders, because I tend to think that the lead tables, or the leaders on the league tables, tend to kind of think about risk the same way. So it could be, it may provide some insight. I think from our perspective, it does form part of our strategy. That's one of the reasons why we've embraced initiatives like PRB, like Net Zero. As I mentioned before, when you look at our balance sheet and the environment, the climate risk that we face on an annual basis, I think it is far more concentrated and at risk to natural disasters than many of the other globally systemic banks, right? Because obviously they have diversification. They're in jurisdictions that really don't have some of these climate concerns. So it's existential for us to actually think about how we risk manage that, right? So that's one of the reasons why we actually have to be supportive of some of these commitments, because it has a disproportionate impact on our balance sheet. So, our strategy is really around, I think, three things, right? So we want to be the most responsible bank in the Caribbean, and responsible meaning that we want to make sure that in all the jurisdictions in which we operate, including Ghana, that we are responsive to the needs of the societies. And I mentioned that previously in my remarks, is that we want to make sure that we actually are, we're serving the needs of our citizens and of our countries, right? You also want to be relevant, right? So this goes to, I suppose, one point around how we think about our risk matrix is that we want to make sure that our models factor in what are the new risks to our assets. We've seen now in the last 2 years that we need to also put in there some kind of aspect around potentially some global pandemic and what that could have to some of the operating assets that we have. But important in that is definitely environment and social. So you talked about, I talked about before, leaving certain segments of your population behind. You have to make sure that you have products for, to me, young entrepreneurs, for at-risk segments of the population, not your traditional segments. Because if you don't, not only is you're really opening up yourself for potentially an emerging threat, i.e. fintech or some disruption that may come and swipe that population. But also, I think it creates this kind of imbalance in society, which is counterintuitive to what we're trying to do by being responsible. So, so the second aspect is market relevance, making sure that our products meet the needs of our societies. And then for us, the last one is resilient, which probably speaks to a lot more of what he's saying, is that we have to make sure our balance sheet can withstand some of these shocks that we've seen, whether it be hurricanes or whether it be through things like financial crisis or even the global pandemic. We have to make sure that in our balance sheet, we have pretty resilient assets. And I think that's more of a journey as opposed to some model that we're going to plug in some inputs. I think what COVID has shown us is that, in a lot of jurisdictions where we have hotel assets and things like that, we're going to try to make sure that we are running some kind of model to make sure that, if travel falls off again, like it did in 2020, that there's some element of a cash position in there, some significant cash position to help a lot of these businesses kind of, float themselves through the next couple of months while we wait this thing out. So it's how do we, from a resilience standpoint, how do we help our clients ultimately make their businesses more resilient? And with real estate, we could do that, right? We could put in better building codes, but some of the operational things may be more iterative than just some broad brushed approach that we speak to our clients about. So it has to be that we adapt to these particular types of shocks that come in. We learn from them, and we make sure that the next time around that they come, that our businesses can potentially be able to withstand them. Maybe not the full brunt of it, but at least maybe they can soften the impact that they'll be faced with.
Thank you, Ray. Yes, and I'm listening to you that as soon as banks starts, more quickly they will be ready for a resilient world, because we know that climate risks are on the ground, the social impacts are on the ground. So yes, so we're moving to the end of our panel. So maybe I would like to make a question for Jose Luis and Ray, for especially looking at our audience. So what kind of recommendations you can give to our audience? What are the main message that you like to give to banks today? And maybe what are one or two key steps they should take in their own organization? So Jose Luis, please.
Sure. Well, in terms of recommendations, I think the main purpose of adopting and embarking in this journey, as Ray mentioned, are very evident. I believe more so in the Caribbean, that is, there is a higher exposure to climate risks. But in general, we have seen that, the recommendation would be, this is something that this is a challenge that cannot be let's say, fought by only one institution. I mean, it is the aggregate effort of all the members of the financial community that will make a change. If I put the case of Banorte in Mexico, it is not enough for one or two large banks to adopt this. This has to be something, a joint effort from all the financial intermediaries. And eventually, I think one of the difficult things to see is that by adopting this initiative, you will not see immediate results. This is not something that you will see next year. Oh, this is a very clear example, and we're making huge progress on the environment. This is something that you need to know that you will embark on this journey, and you will probably see the effects in medium and long term. And this is something that you have to bear in mind, that probably the rewards, let's say, for the environment will not be immediately seen. But if you make a good impact on the rest of the financial sector, more and more people will join, and then you will definitely see an impact. Another thing that I would say it's very relevant and has been very relevant for Banorte. We are close to 90% publicly traded company. So most of the owners of the bank are global institutional investors that have shifted very aggressively to monitoring the progress that we have been making in sustainability at the bank. So an additional benefit of what we can do for climate and the environment, it has also to do with we have access to most of the largest institutional investors in the world that are now having very clear mandates that every investment that they make in Banorte or in any other company has to comply with very strict sustainability and ESG metrics. So I think this is something that is inevitably changing the scope of investment also in the world. Companies that do not comply with very actionable and disclosure in what they're doing going forward will have less and less appetite from foreign investors to continue funding the strategies of the group. So I would say it's a win-win situation. If we are involved in helping the environment, in becoming more responsible lender for our communities, and reporting on the progress on that, then that will also be echoed and seen by the largest and global institutions, and they will be also committing to continue funding the strategies and continue being shareholders and continue investing in emissions, in issuances, and that we as banks need to continue operating. So I think it's something that grows and has a broader impact.
Thank you so much, Jose Luis. Over to you, Ray.
Thanks, Maria. I think maybe my message to CAB members would be, I know most of you guys are looking at the sustainability space, but as you think about potential frameworks out there that are ideal for not only your size, but also ripe for the region, right? Given our focus on climate and things like some of the social things. I don't think that you'll find another framework that is as adaptable, as well suited for the region as the principles for responsible banking. Like I mentioned, it's tied to the SDGs, which a lot of our ultimately our national development strategies are based on. So it gives you a direct plug-in to your key stakeholders, right? which is in many cases your governments. It gives you reporting abilities, it gives you resources, it gives you the ability to really think about the data that you're collecting, how to properly risk manage with some of that. So there are a lot of these frameworks out there that ultimately, maybe from an ESG perspective, you guys, you could think about signing up for. But I just think that they're almost, they're either silos or they don't really see the whole picture, right? I think this brings all of it together. And I think sustainability has to be part of our operating strategy going forward, because of all the things that I mentioned, and I don't need to kind of rehash it, but it is now part and parcel of what our stakeholders are demanding from us, i.e. our shareholders. As always, as Jose Luis mentioned, if you're publicly traded, you're getting some pressures from some of your shareholders in terms of like, what are you guys doing in the space? But the biggest stakeholder is going to be ultimately our depositors. And they're going to basically vote with their money. They're going to identify with a bank that really meets their values and their beliefs. So, going back to this whole point of being relevant, we have to really understand now that this Gen Z, this next generation that we're facing, they're not the quiet generation. They don't just accept things the way they are. They challenge everything in the status quo. And I think part of that is the way that we think about our traditional business model. They're going to push the boundaries there as well. So, as I think about frameworks that really would be useful for you, I think PRB, given the tie-in to the UN, given the tie-in to the SDGs, given our respective countries' tie-in around our national development strategies to the SDGs, I think this is the best of both worlds. And I do think that you can then structure financial products that that have a direct linkage to a particular SDG in certain jurisdictions. I'll leave you with a couple examples of what we're doing. So in Guyana's one of Guyana's big national. I'm Guyanese, by the way, so it's something that I'm very proud of. When I mentioned this, one of their big pushes is to eradicate poverty, right? So when we think about eradicating poverty, we have to think about it from the services which we offer. So generally, in most banks, you would have things like, your typical banking fees and a lot of fees. One of the things that we did as part of PRB is we actually had to design ultimately a low cost, almost no cost service or bank account for particular segments of the population, so that we can get them into the formal banking system, because we think that it's a journey. So if you get into the formal banking system, all of a sudden your financial IQ would increase, because now you have access to different types of financial products. Maybe you get more information, you understand a little bit better how the system works. And then ultimately, I think we think of it as kind of a gateway to potentially maybe bootstrapping your way out of some of these situations. So I say that to say that, we designed something that ultimately fit hand in glove to the national development strategy that ties in directly to the SDG, which I think is SDG 1, around something that's very specific to the country in which we're operating. And that's what we're doing in all of these territories. So, I don't think that you'll find that in terms of any framework that is just so adaptable, so customizable, that it allows you to really make sustainability part of your overall business model, your products and your services, like you would find in PRB.
Thank you so much, Ray. And I want to thank a lot to Jose Luis and Ray for your generosity of sharing your experience and your knowledge today. I learned a lot with you, and I'm sure that our audience also learned and was inspired by. From my side, I would like to say that I am very positive and optimistic about the Caribbean. I've been working with UNEP-FI since 2019, and I would say in the last 1.5 years, I've been working a lot with the Caribbean, as I mentioned before, with Suriname, Barbados, St. Vincent, Grenadina, Grenada. If you are in one of these regions, we're going to offer a series of activities with IDB and CDP. Please reach us. We'll be very happy to work with you. And I think, again, I also would like to say thanks to CIB. Very important to have you on board and have this partnership. And I think that regarding the questions, how much advance, I think we are advancing, and we will advance even more in the future. So thank you so much, Jose and Ray, and I will turn over to Johan.
Thank you very much, Maria, Kay, Ray, and Jose Luis. It's been a pleasure to hear all the advances that we have and the great agenda that's been developed, and it's still a long way to go, but I think that we're going slowly but surely. I would like to thank everyone for participating today. We will have a second part of this event in May. This is going to be targeted for more the operational teams and the business side of the banks. So we will be sending more information via email, but we would like to thank everyone for participating today. And it's been a pleasure to meet you and be here virtually. And hopefully next time we'll be in person enjoying the Caribbean with you. I don't know if somebody from CIB wants to say some words.
Well, Johan, I could just close this out this morning by saying thank you so much to UNEP-FI for partnering with us on this initiative. I think it was very well received. We've had an audience, as I told you earlier, that's been pretty much engaged throughout. We've seen a lot of people interacting in the chat as well, and as you say, we certainly do hope and look forward to being able to host folks later on this year. We are planning to have CAB conference. Ray, as I noted in the chat, has been virtually ever present, along with Maria, has been ever present at CAB activities over the last couple of years, but virtually. So perhaps this year we will have the opportunity to have them present in St. Lucia. And as Mr. Hart said, it's always better to be in the Caribbean. So perhaps we can have you all in St. Lucia in October for CAB Conference 2022. But it has indeed been a pleasure, and I think it was a really wonderful learning experience. And we look forward to being able to onboard more of our members with UNEP-FI and the Principles for Responsible Banking.
Thank you, Terry.
Thank you very much. Thanks, everyone.
Thank you all, and we look forward to the next iteration of this session, which is going to be next month, and you can look forward to seeing the invitations for that either in your inboxes or as well on our social media platforms, and we'll be giving you all the information as soon as it is available. And once again, thank you, and do have a productive day, and have a wonderful Holy Weekend for those of you who will be celebrating, and for those of you who want to perhaps having a little bit shorter weekend, do have yourself an enjoyable and productive rest of the week and weekend nonetheless. Cheers.
Thank you. Thanks, everyone.